Hello and welcome and hello and hello and welcome. Oh my gosh, am I excited. My name is Danny Deals. The show is Un Poco Mas. For executive producer Hurricane Lopez and Stock Karen, we would like to say welcome and hello and hello and welcome. Guys, it's ER day. It's July 31st, 2023. It's 9:05 a.m. That's a Topper time check. 9:05 a.m., 5 minutes past the hour, 55 minutes to the top of the hour, 25 minutes to the bottom of the hour. It's about 3 hours until your lunch break. If you're out here on the West Coast, perhaps you're at lunch right now on the East Coast. Guys, we are talking SOFI stock, ticker symbol SOFI. With 4 hours left in the trading day, the stock is up $1.73 to $18 or 18%, excuse me, not $18, $11.24. The day's range has been 10.30 to $11.70, opened at 10.39, gapped way up, and guys, basically the stock has traded essentially flat from right where the graph started. At 10.27, the volume is extremely heavy at 151 million shares traded, and we are not even nearly halfway through the trading day, only 2.5 hours in. Um, Guys, the Bears were the suckers on this one. I have been telling you all last week, guys. Instead of doing the classic pump and dump where they pump a bit pre-earnings and then, short and dump the stock afterward, they did the opposite this time. Market makers saw the good ER coming. They knew what was coming. Um, and especially once they saw that banking data, but they knew what was coming. They decided to eat their own. So they, instead of running a pump and dump, they ran a dump and pump. They pushed the stock price down last week, got people to sell going into earnings rather than leading people in with FOMO. They got people to sell, panic sell on the fear, stop people out. They bought low. Then they flipped their short, went long. So the real bag holders, guys, were the shorts who came in late, the shorts who shorted on that run from over $8. These shorts are totally screwed. They're taking huge losses. Now, I know a lot of them were hedged with these masses of call options we see today, guys that are just up an absolute fortune. There's 40,000 calls at 950, up 100%. There's 20,000 calls at 10, up 95%. There's 14,000 at 1050, up 90%. There's 35,000 at 11, up 70%. 55,000 and 57,000 at 1050 and 12, up 50 and 35%. Respectively for puts, again, a lot of volume out there at 11, little bit less. That's 42,000. Those are in the toilet. 15,000 at 1050 in the toilet. All the puts are obviously in the toilet because the stock ran up 18% on the day. Guys, let's take a look at the charts. After all, I am the chart master. I have the tidy whiteys to prove it. I told you guys basically what was happening here was that the market makers pushed the stock all the way down. The pattern was very specific. A lot of people will put names on this. They'll draw fancy graphs that they'll pull out, but it's not necessary, guys. These charts are not as mysterious as everyone would like them to be. They brought the stock in a certain way, and essentially it's following that exact same pattern back out, and I believe it's going to go back up in the exact same manner. If you make this your midpoint, you have exit 1, exit 2, you have T1 and T2. These basically mirror each other. And this level here, this $11.23, 11 anywhere in here, you notice over here, guys, this, whoops, don't do that. I don't know what that was, guys. I accidentally moved that. I didn't want that on draw, but just pull over here. Um, so, guys, the stock consolidated right in this area for approximately 1 month. And this was in last January to February 2022. We came down, we rode this exact pattern. This is the midpoint. Same thing coming out. This was the short attack for the last ER. This was the short attack for the ER before that. But then, guys, you'll note this slope of this line is very much like the slope of this line. And the time it takes to move from that period of consolidation down to this bottom represented here is exactly the same time it took from here to go to this bottom here. It's very, very similar, guys. I mapped this out. I counted the candles. So I would not be surprised at all if we're going to go ahead and follow this same pattern. If we go ahead and consolidate right here for in this area anyway for a couple of weeks to a month, things shake out. The stock will probably, come down here a bit, maybe break through this line. But then what I like to happen after this, guys, is for the stock to basically move up on this side the same way it came down on the other side. And it's basically as simple as it gets, guys. We have a, sorry, the chart is a little bit slow here. My computer is overwhelmed with articles and nonsense I have plugged in. But if you look at this thing, guys, it's not super complicated. You find the midpoint, you find this low, this low, this low, this low. They mirror each other quite nicely. The slope of this line and the slope of this line mirror each other quite nicely. This wedge that I drew coming into earnings, if you remember, guys, I drew an X basically right here representing where the stock would be. Sorry, guys, my charts are horrible. I drew a line right here, this blue X, way before when the price action was back here. I drew an X saying right when before the earnings, that's right where we were going to be. The stock price absolutely jammed on it. Then I said we were going to bounce up through 10. After a good ER, the shorts would eat their own, that the shorts would flip to long. They were going to basically do the opposite. And that's exactly what we saw happen, guys. Exactly as predicted. Now we're up here consolidating along this line. Basically, I can't get back there on this chart because it's too long, but we were consolidating, here, same as we were consolidating here. And guys, you can see if I start to take a lot of this like nonsense away, you can start to see that these charts mirror each other. I mean, it's real obvious, guys. I mean, let me just take some of this stuff away, but just look at the pattern coming in and out of the chart. Look at the slope of this line. Look at the slope of this line. Guys, we're going to consolidate here and we're going to continue this run up to my target price, 1375. We're probably going to see our next area of consolidation is going to be right here in this 1465 to 1470 level. And I think we could easily break that down, guys. This stock has been beat absolutely to hell. Remember, the offering price on this stock was 10 bucks. After a couple years of nearly flawless execution, tremendous amount of growth, we're right back where we were, guys. This is cheaper than people were buying the stock during the SPAC days when it was IPOE. So, guys, instead of a pump and dump, we had a dump and pump, shorts flipped, ate their own. What's critical about the growth story today, guys? Let's take a look at this write-up on Morningstar, 31st July, by Emily Berry. SOFI, company ups its full-year outlook and discloses the sale of some loans. SOFI technology was surging 20%. Financials Technology upped its earnings outlook for the full year while beating expectations in the latest period. The company also disclosed $340 million in whole loan sales, a move that seemed to sit very well with Wall Street, considering concerns growing out of it. And that basically blows away the short thesis by the Chia Pet and his little minions, his little short turd wannabe pasty, dishonest turds who just attack a stock over and over and over and over with downgrades and reiterations and negative notes, anything to serve their short selling masters. I used to think Wedbush had some credibility until David Chiavarini, the Chia Pet, got a hold of the SoFi stock and made an absolute ass out of himself in service of his short-selling cronies. In my opinion, that's what he was doing, was aiding a short attack on the stock. I don't think the timing could be taken any other way. I have no proof of that. It's just my opinion based on the circumstantial evidence I see. Loan sales in the latest quarter came even as Chief Financial Officer Chris Lapointe suggested on the earnings call the company would also continue to hold loans. The company aims to always maximize return on loans that we originate, maximize equity. That's going to take different forms given the market environment we're operating at the time. This quarter, we ended up doing a few small sales to keep channels open, but we remain very focused on maximizing returns, which means holding these loans for a longer period of time. Guys, SoFi has some of the highest quality borrowers in the entire lending industry. It is absolutely absurd to think there would be lack of demand for their loans. It's just stupid. Oh, we want upstart loans. We want a firm loan. These people that are going to default, these losers in leaky trailer parks buying Peloton bikes they can't afford on 48 easy payments, and then they're just going to use it to dry their laundry because their fat heads are not going to ride those Peloton bikes. It's not going to be like in the morning, hello, let's go. They're not some little chipper woman in, yoga pants standing up. It's some old fat guy in a trailer park buying a Peloton bike on a firm. Who wants to buy those loans? What an ass. You'd have to be a complete idiot to buy those loans. While the stock is near technical highs, the raised guidance and stronger margins, particularly in the financial services segment, present a clearer path toward profitability by the end of the year, wrote Keefe, Broyette, and Woods analyst Michael Perito. And he was low. He was like at 6. Dan Dolev of Mizuho said that the sizable increase in the full year guide is a sign of strength. In the second quarter, SoFi generated a net loss of $58 million or 6 cents per share compared to $106 million or 12 cents per share. So they basically cut the loss in half over the last year. They were looking for 7 cents. Revenue rose to $498 million from $363 million. So that's a huge increase. The FactSet consensus was for 486. So that's a sizable beat there. Add 13 million more. SoFi, this is critical. Addition of 584,000 new members during its second quarter, along with 847,000 new products. Total deposits for SoFi grew 2.7 billion to reach 12.7 billion by the end of the quarter. 90% of deposits were from direct deposit members. That means they will continue to get those deposits. They will continue to grow those deposits quarter after quarter because they're having such a high conversion rate of their money customers that they're getting to direct deposit. And that is the holy grail for banks, guys. Direct deposit. That's how you increase the size of your bank. That's how you increase the assets under management. That's how you increase your loans. And that's how you make more money, guys. That's how you do it. Put it in the books and send them to the line. Guys, one thing I was a little bit and also, not only that, origination volumes for SoFi's personal loans jumped 51% to 3.7 billion, marking a company record. They were up 27% sequentially. This strong performance was aided by years of investment in technology to automate and accelerate the application to approval process for qualified buyers and constant testing of risk controls and underwriting models to maintain high credit quality and strong returns, the company said in a release. Student loan origination volumes were down 1% year over year to 395 mil, continue to reflect the uncertainty around federal student loan payments. Guys, that's still going to be a source of FUD. Biden's still talking about, doing some type of forgiveness, which I think they should do for some people who really can't afford to pay, but most of the people should be paying back their debts, paying back their loans, just like they agreed. And I think this will all shake out. It might take till the presidential election. I don't know. I don't even think Biden's going to get to the presidential election personally. I think he's just too damn old and he's just a little bit out of it, in my humble opinion. But, Diamond Joe Biden has proved very resilient, and he might just hang in there long enough to keep old Hunter in the game, keep old Hunter in the lap of luxury, smoking crack at prostitutes, having kids with strippers, all that fun stuff. Home loan originations declined 27% from a year before to 243 million, though they were almost tripled on a sequential basis. Began to benefit from the technology platform and overall loan capacity from our acquisition at the beginning of the quarter, and that was, of course, Wyndham Capital Mortgage. So the company reported 129 enabled client accounts for a technology platform in the second quarter, and that signed 5 new clients in the period. That's Emily Berry. Guys, if you look at tip ranks, the latest reiteration was yesterday by Dan Dolev of Mizuho, who is a 1-star analyst here, really bad, but he's a very intelligent guy. I'm a little bit disappointed to see him reiterate at 9. I hope he raises that after this ER, because that came out yesterday. And I know he's very bullish on the stock. I think that $9 target is low, but, who am I to say? Guys, so a couple of things The critical thing here is not the EPS, it's the growth story, guys. It's the member growth, it's the product growth, it's the direct deposit growth, it's the deposit growth itself, the growth of the bank, the growth of financial services. All those things are hot, 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 heading in the right direction. EBITDA guidance, absolutely critical. Um, so basically, as they scale, the stock-based compensation is going to come down as a percentage of the revenue, and that EBITDA is going to get transferred to bottom line profit. You just have to scale. You just have to get there. SoFi is well on their way. The big bear thesis was that the loans are a big issue. There's no demand for the loans. That thesis was blown out of the water. There is demand for the loans. SoFi was making more money holding the loans. They're still holding the vast majority of the loans. I think they just sold some to prove that the Bears were completely full of shit and making up FUD. And, good for them. They could sell all the loans if they wanted to. It's completely obvious. It proved people like the Chia Pet, JP Morgan, Morgan Stanley, their thesis was completely wrong and completely made up and completely FUD. And they should retract those ridiculous comments and targets. The shorts are probably hedging with calls, and they will try to drop those calls on retail. We looked at those. Heavy volume on a couple of the puts, but extremely high volume on the calls, and those are up huge. You have to believe a lot of that is hedging, that they're not going to let retail make all that money, and they are probably going to try to dump those calls on retail and then hit the stock, at least push the stock down somewhat later this week and kill some of those calls, or at least make some money back off retail. So the combined annual growth rate, they're talking, a lot of these bears are talking about the teens. They're talking about 15%, but I'm seeing guidance for this year, top line, 33% growth approximately, guys. We're seeing the numbers year over year come in the 30s. We're seeing even sequential growth in deposits of 26% quarter over quarter, guys. The notion that the CAGR is going to be 15 or 16 over the next 5 years is bullshit. It's going to be 22, 23, 24, could be 25, 26. There's no reason to believe that the growth is going to slow to half this current rate. There's just no reason to believe it. I expect it to pick up in Q4, especially. SoFi Stadium is a big driver of membership growth and business and name recognition. So I just think the FUD in terms of they can't sell loans, the growth rate's stopping, they can't add members, it's too expensive, they can't make money. It's all FUD. It's all out the window. It's all nonsense. If you look, good article out in SoFi. The fintech leader delivered a strong quarterly beat and raise performance this morning. This is by Steve Symington, July 31st, 2023. Basically, it goes over the same numbers, but kind of goes into a little bit more into the growth. SoFi CEO Anthony Noto credited the beat to a combination of record revenue from its technology platform and financial services business segment, as well as continued strong lending segment growth. SoFi also increased its member count by 44% year over year. 44%. We'll be back in 2 and 2, and we grew by 4 and 4. 46%, Chuck Woolry, 46%. Or excuse me, 42%, including 584,000 new members this quarter. Products climbed 43%. So members are growing 44% year over year. Products are growing 43%. Everything else is growing in the low 30s, the numbers. EBITDA margins are great. EBITDA is growing extremely fast with a huge guidance raise for EBITDA, and they're looking for a CAGR in the mid-teens. What the fuck? What are these analysts making up? What are they smoking? Are these guys on crack? Are they just, there to fillet shorts and make stuff up and scare retail and set off stop-loss raids? I mean, it's bullshit, guys. It's bullshit. Our record numbers of member additions and strong momentum in products and cross-buy ads, along with improving operating efficiency, reflects the benefits of our broad product suite and unique financial services productivity loop strategy. Notice in the statement. And he was in a windbreaker, guys, and he looked great. What's more, total deposits of companies subsidiary climbed 26% sequentially, 12.7 billion, adding an attractive lower-cost funding source for SoFi's loans. Over 90% of SoFi money deposits, including checking, savings, cash management accounts, were funded by direct deposit members, with a median FICO score for new members of 747. Guys, that's top tier credit. That's top 20%. They're the best. SoFi raised its full year guidance. We already heard about this. The guidance would be 30% year over year, an increase from previous guidance. So an adjusted EBITDA of 333 million to 343 million from prior guidance of 268 to 288. So that is a massive, massive increase in EBITDA guidance, and that is extremely important, with all due respect to Charlie Munger, you old bastard. I don't care if you think EBITDA is fake earnings. There has to be metric to judge companies by who are going to make a profit but have not yet done so. And EBITDA is one very useful metric. And, Anthony Noto loves to say EBITDA. We have achieved record EBITDA for the 400th time in a row. So, in any case, guys, that's the Motley Fool. If you go over to SoFi Earnings, Tale of Three Trends, Customers, Revenue, and Profits, this is by Michael Wiggins de Oliveira. We'll take a quick glance at it. Margin is good with 16% EBITDA margin again this quarter, looking to bring that up to 20%. SoFi Technologies experienced a slowdown in customer adoption and product materials revenue decline for 2023. Despite improving profitability, the revenue growth rates are decelerating. See, this is a bullshit article. SoFi's bullish full-year outlook revision may not prevent revenue growth rates from reaching around 30% CAGR, a significant drop. Yeah, see, 30% CAGR. Guys, it's a significant drop, but that's just because the growth was incredible. Don't downplay amazing growth just because it was faster in as a ratio the year before. While the balance sheet is stronger with about 30% cash, listen to the FUD come in. While the balance sheet is stronger, the stock's valuation, assuming optimistic 2024 assumptions, appears fairly priced, considering the company's still largely unprofitable and decelerating revenue growth rates. Bullshit. I am Michael Wiggins de Oliveira, and I focus the opportunity to profit from the great energy transition using a traditional value investment methodology. What does this have to do with SoFi? Why are you writing an article about SoFi? You want to focus on the great energy transition? Like, focus on the great fintech transition, D-Baggerino. Investment thesis, one of the most closely followed fintech companies, but I don't see Q2 as being a win for either camp, bulls or bears. The negative aspect that surfaced in the quarter's customer adoption curve is showing signs of deceleration, and similarly, SoFi's outlook for the remainder. SoFi's revenue growth rates could exit 23 around 30% CAGR, material slowdown from last year. Yeah, but still outstanding. This is really some master level FUD. Yes, it has slowed down, but look at the rate other banks are growing. It's like zero. And then SoFi has growth in certain areas that are very, very profitable. On the other hand, a significant positive element from the quarter is the pace at which SoFi is increasing profitability. For my part, I remain neutral on the stock. Adaptation curve, the single most important aspect is the customer adaptation curve. Looks very, very healthy to me. Year over year growth, 44%. Yes, 46% last quarter, 51, 61, and these numbers were much higher, but they were much smaller numbers, guys. You only had, 2 million members over here. Now you have almost 6 million. So even though you added, back here, you're adding less than 1 million members, quarter over quarter. That's 100% year over year. Here you're adding, over 150 million, 150, you're going from 433 to 584. And that is an increase of what? I don't know. It's about 30%, 3, yeah, 4, more than that. Anyway, guys, I'm so tired. I didn't sleep last night. I can't do math in my head. But that's 1,000. Sorry, guys. I'm just like totally off my head. They're not adding. It's 433,000 last quarter, 584,000 this quarter. So they added 150,000 new members. They actually decelerated last quarter from Q4 to Q1. They went from 480 to 433. So they added 100,000 more members than they did in Q4. That's the best quarter of additions they've ever had that I can see on this chart. And they tend to do their best ads in Q4. So expect, a huge increase from this number in Q4. At least I would. This time last year, SoFi's membership growth rates reached 69% year over year. Membership growth rates decelerated to 43% with 6 million members. I don't believe we are seeing a slowdown due to the law of large numbers. I believe, given the higher interest rate environment, SoFi is no longer the only fintech company offering deposits high savings rate. That's true. I mean, Robinhood is offering a higher rate, so that's legitimate criticism. And given the greater availability of product choice, competition for depositors is now rapidly increasing, which weighs down SoFi's appeal in the default. I really don't see it that way. I mean, the growth is still outstanding. Part of it could be due to the competition, and part of it could be due to the law of large numbers. Doesn't have to be, mutually exclusive. SoFi bullishly upwards revised its outlook 30 million, perhaps by the time 2023 is completed. Full year revenues will be around 2.2 billion versus guidance at 2.0. One way or another, I believe the message is clear. SoFi's revenue growth rates are decelerating. I don't believe that investors should expect SoFi to exit Q4 2023 growing its revenues by more than 40% year over year. Yeah, they're not calling for that, guys. Nobody's calling for that. This article is really, really cleverly FUD-laden bullshit because nobody's guiding for 40% year over year this year. So it's just basically like, I don't think anybody's saying they're going to hit those numbers, but he's just kind of making up that number and then saying they're not going to hit it. So it's like a straw man argument. It's a bunch of bullshit. Particularly given that Q4 of last year is such a high hurdle for SoFi to cross, even if we presume that SoFi's Q4 2023 adjusted net revenues reach 570 million, this would put SoFi's Q4 revenues growing at around 30% CAGR, a significant drop from the 57. What's more, this 570 million of adjusted net revenue, I presume H2 is meaningfully weighted toward Q4. Is that such a bad outcome? It truly depends what the market is fundamentally expecting. The market has come to terms with the fact that SoFi's revenues are slowing. SoFi is about to exit Q4 with a 30% CAGR. It could be enough to reignite its share price beyond the $10 per share previously retraced steps. Profitability profile is improving. We already went over this. EBITDA reached close to 80 million. We can make the argument guided for 60 million, which was a sequential decline. Investors will be hoping SoFi is lowballing its Q3 guidance, could end up positively surprising investors down next quarter. Indeed, it could be the case that Q3 ultimately report 90 million EBITDA. That's SoFi's weakest quarter, with Q4 being earmarked for around 130 million of EBITDA. Simply put, SoFi is doing everything in its power to demonstrate to investors that even if its growth rates are slowly down, SoFi is more focused on balancing growth with profitability. SoFi is a fairly valued stock. They go through the EBITDA, they go through the numbers, they go through the interest expenses, depreciation, and the share-based compensation, which is very, very high at 75 million, but it was actually down from 80 million the previous year on year. SoFi sees profits, he sees costs. Case in point, the bulk of its adjusted EBITDA comes from depreciation, amortization, and stock-based compensation. Will those costs ever go away? No, but I mean, stock-based compensation will get lower and lower as a ratio as they grow. So they talk about the ratios slowing with the revenues, and that's not the large number that's going, but they don't talk about the fact that the stock-based compensation will get much lower as a revenue, as a ratio as the company grows. So they kind of have their cake and eat it too. They use absolute numbers when it suits the bear case, and then they use ratios when it suits the bear case. Kind of a switch, flip-flop, crisscross, eliminate the motive, double bluff. In Q2, SoFi witnessed a deceleration in its consumer adoption curve. Okay, guys, this is just on and on. Michael Wiggins de Oliveira, Energy, Transmission, Commodities, and Tech. He covers energy, transition, commodities, and tech. Like, what a bunch of bullshit. His unrelenting, prolific, and passionate drive to analyze countless companies. Wiggins. I'm just curious, like, what is this guy's rating? I have no idea. Wiggins. Michael Wiggins de Oliveira. Okay, of course, guys. He's a total shitbag. I mean, he's a total useless forehead, 5 o'clock shadow, moose in his hair, sack of dump. His success rate is 43%. He makes money way less than half the time, and his average return is minus 7.0%. If you copied his trades in 1 year, 43% of your transactions would make money with an average return of negative 7.2%. So this guy, it's no wonder when you listen to how stupid his arguments are and how illogical that he has such a shitty track record, that you would do better pulling stocks out of your ass or throwing darts at a dartboard or flipping a coin than you would following the advice of Michael Wiggins de Oliveira. And it sounds like a made up name. It sounds like a fucking moron to me. But, you know, that's just me, guys. The margin is good. We're trying to get back to 20%. We're looking for EBITDA margin 16% this quarter, 16% last quarter. Again, trying to push that number up to 20%. Guys, this is the slideshow 2023 summary of results. You can go through this on your own, but I think the growth looks very, very good. If you look at this chart, I know it is decelerating in terms of a ratio, guys, in terms of these percentages. But if you look at the absolute numbers this quarter, they have increased considerably. Look at the product ads, guys. That came down. The number came down quarter over quarter last time, and then it's up almost 200, 200,000 this quarter. So this quarter looks extremely good, guys, on the growth, and they're trying to spin the FUD any way they can to piss on SoFi, make SoFi look bad. I don't think it's going to work, guys, because when you look at these charts, you look at the growth, you look at the margins, everything's coming up Millhouse, guys. The financial services productivity loop hasn't really started to work very well yet, but those ratios are looking better over time. Guys, let's take a look at where the SoFi stock is. It's now 9:34 a.m. out here in beautiful Los Angeles, California. It's a Topper time check. It's about 12:30 or the lunch hour. Out in NYC, stock still hanging on right around 11:28, right around that critical line that we have drawn. That was consolidation back here and over here. Wouldn't be surprised at all if the stock consolidates near these levels for a while, but and then moves up after that. So you guys can go over this, guys. Adjusted net revenue 489, adjusted EBITDA, they were guiding for 60 million this quarter, actually exceeded last quarter at 77 million. So that was good news, guys. Guidance raise, it's not a huge guidance raise, but any guidance raise in this environment, I would say, is positive. The non-GAAP guidance, you guys can read all this stuff. It's very easy to go over. And these supplements, guys, if you look at the membership growth, it is incredible. Quarter on quarter, guys, 10%. Last quarter was 8%. So that's actually accelerated quarter on quarter. And 10-11% is the best they did last year. So it's actually looking pretty good. Products similarly better than last quarter, better than Q4, better than Q3 last year, less as it comes before that. Lending products, financial services products, again, growth accelerating greatly. Looking at the segment financials, guys, you can see Q3 2023 personal loan originations are up big. Student loan originations are down. Home loan originations are actually up quite considerably, 243 versus 89 last quarter. So that's the best number they've hit since Q2 of last year. So that's their best number on home loan originations in the last 4 quarters. Lending products, again, are up. Adjusted net revenue is up. It's down slightly from last quarter, but up a lot from last year. Contributed profit and loss. Guys, you can go through all this. Lending, technology, financial. It's very important to look at these numbers. I've just been talking forever. I'm losing my voice. Non-GAAP financial, non-GAAP reconciliations. And this shows you guys all the schmutz that goes into that EBITDA number and, depreciation, interest, all that stuff, share-based expense. This is the share-based compensation. Again, 75 million this quarter, 65 million last quarter. It's pretty much in line. This is not growing proportionally to the company. If you look at this all the way back to Q3 2021, 72 million, 77 million, 77 million, 80 million, 77 million, 70 million, 64 million, 75 million. So this is very consistent, guys, and the absolute numbers remaining very consistent, and it's coming way down as a percentage of the top line revenue, and it will continue to do that as the CAGR grows at 30+%. Don't buy the FUD, guys. This is an absolute blowout. Net interest margin components. Again, this is important stuff to read. I'm going to go over all of this stuff, guys. Fair value of loans. This tells the story. Their loans are not in trouble. Their loans are not defaulting at high rates. They are prudent. They are planning. They plan extremely conservatively. They write off bad loans very, very quickly so they can't get hurt. All this is in the earnings call, guys. I encourage you very, very strongly to go over it. Guys, we are trading up 18% on very heavy volume of 157 million shares. Algo has taken hold, guys. Basically, the stock gapped up to where it sits, and it has traded flat all day. Lot of positive press. I told you guys the shorts were going to flip, the market makers were going to flip, go long, eat their own, and run up the stock and make money that way. Instead of running a pump and dump this time, they ran a textbook dump and pump on you. But you guys didn't fall for it. You held your shares just like me. Now you're up huge. Some people have been coming at me saying, hey, I sold a few shares here and there, had to take some profits. I'm not mad at you guys. I'm holding out for an even bigger score, but if you took some profits, you know, God bless, salute. I'm not mad at anybody taking profits. I'm not mad at anybody making money. Guys, this stock just ran up from under $5 to $11.30. So there is absolutely nothing wrong with taking some profits when you have a huge amount there in paper. I wouldn't sell my whole position here. I think the stock will be worth a hell of a lot more than this in the not too distant future, and I plan to sell at that time when the stock price is oh so much higher. But again, guys, I'm not giving you financial advice. You have to do what makes sense for you, and if that is taking some profits at these levels, you know, peace, health, and prosperity to you. Guys, the show is un poco mas. My name is Danny Deals. The SOFI earnings came out this morning pre-market, and the stock has been absolutely ripping on basically a double beat. The EPS was basically in line, not really much of a beat there, but top line, membership growth, deposit growth, direct deposit growth, all knocked it out of the park, guys. I don't see this ER as a home run, but I see it as a solid triple. And we've been hitting base hits, and this really props up the growth story, which is the key to a growth stock and the key to getting these higher valuation multiples that you and I feel SoFi deserves. Guys, thanks a lot for watching. It's July 31st, 2023. We're in the middle of the trading day. It's been a wild one. Feel free to watch my live stream I put on this morning. It's about an hour of absolute wall-to-wall excitement. You know, we'll sell you the whole seat, but you'll only need the edge. My name's Danny Deals for Hurricane Lopez and Stock Karen. It's the SoFi stock. Ticker symbol is SOFI. Stock is running today. We will check back in with you as soon as possible. Have a great Monday. We'll talk at you soon.